What is up, everybody? Welcome to the Russell Journal. This is a very special episode of the Russell Journal. This episode is my thank you to all of the veterans out there who have served and contributed to this country of ours. My father is a veteran. He served in Vietnam. You guys have a very special place in my heart. I would have probably served, however, I was born with a visual impairment that does keep me from service in that regard. So the best thing I think I can do here is try and serve you. And what I really want to do today is provide some clarity into some of the economic things and reasons that nobody else really talks about. Nobody really explains to you as to what is happening and why some of the service and the battles you fought were so important. And it really matters. But what I want to go ahead and do first, if you'll bear with me, is let's run through the technical analysis, run through the chart really quick and things of that nature, and we'll go ahead and then get really into what I want to say to our veterans out there, and really explain to people that I don't think veterans understand, and I don't think that the people of America, our population, really understand either, and it's really sad that nobody really talks about it. So. Okay, if you come into the chart, into the market today, you can see pretty big day of green out there, a little bit of red sprinkled through some of the short indexes, things of that nature. There is some question as to what is happening. Really interested to find out what the ECB is going to do with their interest rates. They've talked about another 75 basis point rate hike. That would be good for, say, the euro. But it would also, take out some of the rally in the dollar. However, there is still sort of the concept of a dollar shortage out there, and so I don't know exactly what that means for those two things. I do know a weaker dollar as of right now is more bullish for stocks. It's more bullish for bonds and things of that nature. So we do have the ECB sort of doing their thing. The Bank of England is also going to probably do another rate hike into their stuff. So you're going to see the euro and the pound gaining in strength. When they go up, currencies trade in pairs against each other. So the euro and the pound would be against the dollar. They're going to take some of the value out of the dollar, and that. Fair enough. That's actually pretty good, given that we're not really doing much to print more dollars at the moment. So you can feel a little more comfortable spending or acquiring euros or pounds. Or even, some of the stuff that's gone on in like the Canadian dollar. Not a big watcher of that, but it is out there. Okay. Today we did get the consumer sentiment report. It is really, really low. It is really, really low. Came in all the way down at like 7%. So consumer sentiment is not looking good as far as our economic situation is concerned. And that's going to be lagging though. That really is going to lag, and it should be pretty low though. They're probably going to get more expensive. And layoffs are absolutely coming. And I don't know anybody who doesn't know that this is happening, that the layoffs are coming and that things are going to get more expensive. That's really the whole point of the process of a deleveraging or, a rate tightening cycle, okay? There is some stuff from the Fed where a couple of the presidents are thinking it's possible that they can tighten too much and cause some real severe pain. However, we already know that Powell, he told us at Jackson Hole there would be pain, and so there you go. And the other thing that we did get from the last FOMC meeting was Powell saying anything they break in the economy, they can now fix. And that's kind of been a lot of the stuff around the rate hikes, why they've been as big as they have, as hard as they have, is in the event something does go wrong, when the interest rates were at 0.25%, the only option the Fed really had was to send a negative interest rate. And that's really not good. You can go back and look at the history of Germany and their negative interest rates. Things were not good for them to do that, but they had no choice. Getting the rates up fast and hard in the event something bad happens gives us a chance to rebandage any wound with quantitative easing. So that is possible that, really kill time until things get better off. Okay. So we're gonna go ahead and go into SPY. We're gonna look at the S&P 500 or SPY ETF, and we are going to go over the chart really quick, and then I really want to get into this part of the program where that is meant for the veterans and things of that nature. Okay, so starting out here on the weekly, you can see that our trend is now it's definitely in the upward direction in a weekly time frame. You can see over here that we are above, so we are in a uptrend. Your bias is now officially to the upside based on the weekly, and your momentum is up. Okay, so this really tells you from here on out, you're really looking for call positions. You want to buy calls. At any pullbacks, you are looking for those call positions. If you're trading this based on the weekly time frame, the target would be up here, this 427, as far as your price target, your first price target would be. There are a few things in between here on this. The monthly, you've got 417 for the monthly 18-month moving average. That's going to give you some resistance. So it's probably a good place to get a pullback to catch the ride back all the way to 427 in the event that you get that or the trend doesn't switch before that happens. Okay, we'll go ahead and go over the daily and take a look there. Okay, so there's a couple of things that are very interesting on this chart that are really interesting here. You can see our trend has gone, it's funny because you went almost from bearish in this one move, switched the whole, this one gap up, switched the whole trend from lower lows and lower highs to higher highs and higher lows. It's really cool how that happened. There's some real cool, clever geometry involved in that. You can see again today we closed up another day, and you are at the upper Bollinger Band, and your momentum is overbought. Your momentum here is you're overbought. You do not have an embedded reading here, so look for a pullback day in the next 2 trading sessions. Typically, from what I've understood, this doesn't get and stay over this Bollinger Band for more than 4 days before you finally get the pullback, or you move. It'll move inside of that band. Okay, it'll get in there, and that's usually where you sort of begin to see things top out. You can go back over here on the chart, see where we got up. We rode that band up, and the minute we got over, that's when things started coming back down for a pullback. So if you've missed most of this move, don't panic. You will get your chance to get an entry at some point. Do not panic and start buying a lot of calls right over the top of this, and try not to go crazy short. If you are shorting, definitely keep that on the scalp side, and you'll make out just fine as far as all of that is concerned. So I don't know what your scalping technique is. So as far as we got next week coming up, we get some more consumer sentiment stuff coming out, and unemployment. And what I think you're really going to see next week happen is on Thursday we will get the job claims, and I think what a lot of the market is really expecting is to start to see those job claims really climb. I am of the opinion that I don't think it's possible to see the numbers that the market wants to see. Maybe some of it in the upward direction, but ultimately I think you've got to wait till almost the week of Thanksgiving before you're really going to see that, and that will pair in really well with some of the rebalancing that will be happening in that last week of November. So, in those last weeks of November. Something again to keep in mind is that when we report, when you report earnings, right? Let's say it's Friday, I got laid off today. I will not be able to file my unemployment until Monday, and that means those numbers won't get reported that Thursday. They will get reported the following Thursday from whatever my unemployment numbers are. So you're still 2 weeks before, if you've seen a lot of the tech layoffs happen this week, especially with Facebook laying off 11,000 employees, things of that nature. And not all of them are going to go to unemployment. Some of them are going to get severance packages. Some of them are going to get other things that are going to keep them from getting unemployment or keep them off the unemployment line. Some of them will they've already got another job lined up, or, some of them will foolishly not even apply for unemployment because they believe that's some type of charity. People forget that with unemployment, you pay into unemployment out of every check, and that's part of your money. That's part of your pay, is that in the event you get unemployed, you will have something to survive on. So that all being said, again, really not expecting to see those actual upticks in numbers until then. And again, you do have other companies like FedEx and UPS and stuff like that really will be taking on a lot of seasonal labor. So not expecting to see the huge tick up that the bulls are looking for, the Fed pivot bulls are looking for at least another 2 weeks, okay? So we will see. I could be absolutely wrong. I don't know what the report says, or who's filing for unemployment, who's not. This is just an educated guess. Again, I have two theses out. One is obviously my January crash thesis. I will have a trade set up based in December on that. And on the other side of that, we are looking at a soft landing bull thesis, which I think is very well possible. The idea of a Fed pivot into, for some reason, making stocks in some counter way go up is a fool's errand, okay? So that really sells it for this stuff. Again, looking for that pullback Monday or Tuesday of next week, maybe on Wednesday ahead of the unemployment data, but that's really where you look to take a significant long entry. This could stay up. If the bulls want to embed this, they're going to need at least 2 more days of buying. Monday and Tuesday will have to be very strong days. And you are against this upper Bollinger Band, so you're in a tough spot to get that embedded reading. So, and some of the other time frames do have it. The 2 hour and the 4 hour, 1, 2, and 4 hour are kind of all embedding at this point. So it's probably more than likely that this will embed, but we'll have to see that on Monday as far as what things do. Okay. So that does it for that real portion of the program. We're going to go ahead and I'd like to bring up a chart of the Wilshire 5000 right now. So what you can see behind me is the Wilshire 5000. This is all of the stocks. There's more than that in this, but they call it the Wilshire 5000. This is the stock market in its entirety. Okay, this index that's right behind me. It's not exactly like the S&P 500. It's not exactly like, the Dow Jones. This is literally all of them. It's just kind of a measurement of how they all balance out. And if you went and fought in some war or served in our military, the thing that you're really servicing to is really actually this, okay? And there's a lot of people out there who say, well, that's greed and that's money and that's corporate wealth and that's corporate interests and things of that nature. And it really doesn't do any justice to you or to your service and what it really matters. And so what I want to talk about really quick, well, it's not really quick. We're not, I'm going to take some time to really give you this so that, you this is a thank you. And you deserve this for what you did and why you did it. So we're going to lay out a few principles. I want you to see this. This is the reason this is where we're gonna end this show, is when I explain kind of all of this. But what we have to print some principles of economics. We have to explain some principles. We have to establish some principles of freedom and what this country is and what it means and what it can become. Okay, so again, if you go back to the founding of this nation, it is a free country, right? It's and it really ultimately was meant to be a union of states. It was really supposed to be like 50 different countries all kind of working together, and somehow we did manage to federalize a lot of it, and to one degree or another. And the thing that you really have to understand about America was we really it's such a unique thing that you really couldn't have planned for. And it's really funny that It's really this swath of land that is this country that's the only one that's really done it and done it to the level. There's some in Canada mostly, but for the rest of it, they've all come with different ideas and stuff like that. And none of them have had at the point that Christopher Columbus sails across here and across the Atlantic and discovers this whole side of the globe and really begins to, and discovered it, whatever. You can break down whatever you think, who discovered it and who did what and who was here first. It really doesn't matter except for the fact that at the point Christopher Columbus shows up, it becomes sort of a new thing, an actual thing. Whether you knew it was there or not, whether they knew the globe was round or, whatever, it becomes a new thing, okay? And I promise I'm getting to you veterans, so you stick with me, okay? The thing is that you have a whole continent with resources, massive amounts of resources. You have, you have game, you have natural resources and things of that nature. And then early in the game, a group of individuals sets it up so it's free, right? Anybody can come here and go and start a gold mine. They can go and trap animals. They can start a farm. They can raise livestock. They can come here and do whatever they want. Okay. The thing you have to understand is this is the first time in the history of the world that that any layman can do this. If you were in Europe, chances are you were some type of sharecropper. Chances are you were never going to have a chance to own real estate. Excluding some countries like the Dutch and things of that nature where capitalism began. But ultimately, you were going to be in your peasantry for your whole entire life at the behest of whoever was the aristocrat in charge of wherever you lived, wherever your economics were, okay? And the thing that you have to recognize here is that this is the first time anybody ever had that, and because of that, you could get it, and you could get it in mass. Okay, that's really, really key. That's really important. Okay, because what will happen later on is as America becomes almost xenophobic up into around the 1940s, before World War II. We don't want to go out and argue and fight with other countries. We really want to focus on America. The problem is that America, through this process of giving freedom to such a mass amount of people, does actually wind up to amass a massive amount of wealth, okay? Now, the thing that you have to realize when we start talking about wealth is a very core tenet of economics is that wealth is created through trade, okay? So what we did is we gave people the ability to go out into the plains, homestead some land. They could have a farm, they could have a ranch, they could do whatever they wanted with it. As long as they lived there 7 years, they had something that could produce and gave them a good. And that good could be traded for other goods. And through that trade, they were able to get wealth. But as it began to scale, it was going to burst out of this country one way or another. The amount of wealth here was going to have to go somewhere else and get other things, okay? So we talk about the concept. So we brought in two things. One, the rarity of America to be able to produce wealth through freedom, okay? That's the very first thing. And the second thing that we want to realize is that when we stepped out onto the world stage, which was going to happen, you were going to have to find some type of way to trade with somebody else, okay? Now, World War II happens, and after World War II, we get the Bretton Woods Agreement, okay? And what happens with that Bretton Woods Agreement is basically America becomes basically the economic pivot for the entire world. Our currency became the reserve currency for the world. Our gold reserves were the reserves, more or less, for the world. And then World War II destroyed the rest of the world, so America was, for all intents and purposes, the only game in town, okay? So the thing that really works good is everybody's on the same system. Everybody's, right? But what would happen through this is you would have other countries really trying to buck against that system, okay? And this is where communism really found a problem, right? We began to have a problem with the Russians, and we really began to have a problem with the Chinese. These two countries, Russia and China. And not that either of these people are bad or anything like that, but that we did have issues with them. And we know this because we had a Cold War with Russia. We also know this because we had a war in South Korea, and we had a war with Vietnam, okay? And the war in South Korea and Vietnam were backed by the Chinese, were being backed by the Chinese, and the Cold War, obviously, in with Russia, okay? Now, the reason this stuff is really important is because what they're fighting for here is control of these resources. And the reason they fought for control of these resources is because to give... Okay, go back to what I said about wealth, right? Wealth happens at the point of exchange, right? But really define wealth, okay? If we define the concept of wealth, wealth is the amount of... your true wealth is the number of days that you could live, provided that from this day you never took on another resource as long as you live. Okay? So, if you never take on another resource, how many days could you survive not taking on any other resources? Okay? This is the measure of wealth. So true wealth is only in things like food, water, shelter, medical supplies, tools that help you get food, water, shelter. Those things are all the actual wealth of a person, of any individual, okay? That wealth is only expanded through trade, okay? Now, what you have to have with that then is you have to have stable goods for which to trade, okay? Now, everything then became, in 1944, became backed by the US dollar. So the stability of the goods had to be was backed by the stability of the dollar. Okay? So if you fought in Korea or you fought in Vietnam, you might have heard things like, oh, you were fighting for things like rice or rubber or, different crops or different goods. Even in North Korea, to some degree, possibly the uranium there, right? So where you are with all of that is that anybody who went to fight there was really fighting to keep China or Russia out of those goods, because their control of those goods gave strength to their currency and it gave weakness to our currency. Okay? Now, hold fast, because I'm going to go even a little deeper, because we're going to go into the Gulf War, and we're going to talk a little bit about Iraq, Iran, Afghanistan, all of those things. Okay? So if you fought in more current wars like those ones, one of the things you'll probably hear a lot of is that you went there and fought for oil. You'll hear a lot of that you're there to make oil executives rich, and that's it. And that's why we've brought up a chart of the Wilshire 5000, okay? You can see on this chart, I'm going to step back, you can see this big massive dip back over here. I can't see it. Okay, that one. See this big massive dip back here? That is what happens when oil goes negative. Okay? That is what happens when the value of oil gets depleted. Or when it tanks. Okay? The value of these resources, when they lose their stability, destabilize economies. Okay? And what happens when you have destabilization of the economy is you're no longer able to produce crops, you're no longer able to produce shelter for people, you're no longer able to produce things because the value of them is gone. It's depleted, okay? And what will begin to happen then is people will stop producing those crops, they'll stop producing those goods, and eventually you'll reach a point where there's not enough of them, and then the value will skyrocket, Okay, you are seeing this right here, right? You see this point where everything went down in value, right? It took a nosedive. They stopped producing it. We could go pull up a chart of oil, and as they stopped producing it, you wind up with oil peaked out this year at $136 a barrel. It went from negative $18 a barrel in a year and a half to $136 a barrel. Okay, so the thing is when you let these markets be wild and sporadic, and you give people control of those markets that could do that, like ISIS, or like the North Viet Cong, or like, the communist, the Red Army, the Communist China Party, or, communist Russia. When they get control of those resources, you are at their mercy. Your markets are at their mercy. And what happens when you have these wild swings as a result of that, people die. People starve to death, okay? And so the thing that nobody really tells you if you are a veteran, and you're especially a veteran of these major conflicts, is that your service and your sacrifice, sure, it protected this. This is wealth. There's money. There's executives. There's rich financial people getting rich off of this. But guess what else there is? There's people who stayed alive. When you defended the value of oil, you made sure that that oil was affordable enough for a farmer to be able to put gasoline in his vehicle so that he could go out and grow crops. And that made those crops affordable for people, and they didn't starve to death. Okay? And not only, especially if you look at something like Vietnam, Vietnam's the third largest producer of rice in the whole world. So if you went and fought in Vietnam and you kept the North Vietnamese from messing with the price of rice, right? Then one of the things that you were able to do there was that rice exports to at least half of the world. You fed half of the world through your sacrifice in Vietnam. Same thing with North Korea, or with Korea. Same thing with the the Gulf War. Same thing with all the other things. So one of the things, and I'm surprised when somebody says, "Well, you went there and you're fighting a war over oil." I don't say like, "Yeah, exactly. We fought that, and that stabilized those prices, and those prices also, the prices of those commodities also stabilizes the price of the dollar." Stabilizing the price of dollars stabilizes the economy here, right? And you can already see this move up and this move down, right? All of that stuff that happened on this chart. And if you ignore that and realize that this doesn't just happen on paper. Somebody had to go out and make this actually happen in order for any of the stability. You can go back and look at the growth that you've had over the last several years, over the last several decades, in spite of economic downturns. So what you really should be thanked for is not just defending freedom and bringing democracy to other countries and doing your best to do that. You really should be thanking for keeping people alive. And that is something that on this Veterans Day I want to thank you for. And I think everybody should thank you for. I think everybody should know this. But unfortunately, political interests, one wants to use oil companies as bad, so they can get into politics or get a job in the government, and others want to use it for other things, handle stuff of that nature, and they really miss this stuff for you. They really miss explaining to you why this is so important for you. It was so important for you to go and make that sacrifice. You saved more than just American lives, okay? So that is going to conclude my thank you to you guys. I hope you guys appreciate it. I hope it means something to you. I hope it made something clear. If it didn't, please leave a comment down below. I would be happy to discuss this with you. And there is a lot more. It is a very big, complicated issue. So if there are questions out there, I would love to talk to people about it and explain it. In the meantime, the Russell Journal is written, edited, and hosted by me, Russell Liss. We're produced by Social Media Shows. Our executive producer is Maria Pereza. Check out Social Media Shows if you would like to produce a show like this. They also have some other cool things that they can do. And until tomorrow, pretend I said some sort of catchphrase.